Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Thursday, May the 5th, Cinco de Mayo. Let's talk trading. Risk Part 4 with Walmal. As always, these videos for educational purposes only. Your results may differ from mine and from Walmal's. Walmal, quite a day on the pound, or past couple of days on the pound. Seems like things just went crazy.
Yeah, it's been all week, and it's actually started on Thursday or Friday of last week. I mean, we have all these days, over 100 pips. I think there's only been one day that was not over 100 pips, and that was only like 97 pips, and that was, I believe, it was probably Tuesday, I think. But all the other days, but some of these days, not only they're over 100 pips, they're close to 200 pips, if not over 200 pips. I mean, today's range, what is it, like 270, 275? Something nuts like
273.
that. 273.
Yeah,
I
but
mean, it's just
actually,
crazy.
yesterday we had 186, and Friday was only 97, and then last Thursday was 124, and then Wednesday was 174.
I think you're a little bit skewed because today's Thursday.
Oh, am
So
I?
Friday, yeah. So it would have been today was 273, Wednesday 186, Tuesday 97,
Yeah.
and Monday 124. But yeah, but either it doesn't really matter. I mean, it's just been consecutive days, one after another, of these movements. And then you pointed out, earlier today, which is just incredible. Like, I don't remember the exact numbers. Like, today's range is 273, and a week's range is like 276, or
Yeah.
something nuts like that. It's
Right.
like talk about ranging. We're just ranging inside and out. In and out of that entire range for the week. And I keep on saying that I think we can make more money on a range than we can on a trend. You just go and trade your rat trade. Man, it would really have cleaned up today. That's for sure. It's just one of those types of weeks that happens, and it's fun to trade this. As long as you're on the right side of trade, I guess. But it's been, for me anyway, it's been a lot of fun.
Well, it's definitely been crazy, that's for sure.
Sure. I mean, it's 7 o'clock Eastern time today. We had that news come out, the British news come out, and literally in like the period of like one tick, it jumped like 30 pips in one tick. It was like, holy cow, what the heck happened here? And
Right.
I had forgotten that news was there, and luckily I wasn't in a trade or anything. But that's why we have stop losses put in place to protect ourselves. Talking about risk, protect yourself. Markets are volatile, and so you never know what the market's going to go and do. So you need to go and always have something in there that's going to protect you.
Exactly. Yeah, and the other thing is, I had mentioned, you know, when you look at charts like this, for some people, they get afraid. There's like, oh, the market's too something for me to trade. And the thing is, the market's just the market. Anything can happen any day, any time. And
Oh yeah.
we talk about stop losses, managing the risk, and that's just it, because this is a speculation. We don't know what's going to happen next. If we did, the market would cease to exist.
That's right. Everybody would agree that Coca-Cola goes for $1.50 a can, or whatever. It would just, everybody would know that, and everybody would agree to that, and it wouldn't change at all. Or if you want to put it into a true commodity like oil, oil's worth $90 a barrel, and it doesn't move from that ever. Into infinity in time. But the reality is, some people think oil is going to be more expensive. Other people think, hey, this is expensive and it's got to come down. So that's what causes it to move. And sometimes a big player gets in there and he decides to go and move it, and that causes a move. Or you just get a majority of people that go and say, hey, this is way too expensive. I'm getting out now. I'm taking my profit, or taking a minimal loss, and I'm just jumping out. And that causes the market move. And the problem is, the market. I like to say the market's a living organism. And it is, because there's living people behind it making real decisions. And because of that, the market's going to do what the market's going to do, and we can know what we're going to do. But that's the only thing you know is what you're going to do. You have no idea what the market's going to do.
Well, yeah, I would agree. It's funny you mentioned the thing about Coke because I was in the store a week or two ago, and I, lined up at the register, and I looked over, and I was in the soft drink aisle. Well, I haven't bought soft drinks at the grocery store, and I can't remember how many years. Um, but the point is, I looked at the price and it was $3.69 for a 12 pack, and I'm like, holy cow! I remember when 12 packs were $2.50 and on sale 5 for $10. And I'm
Right.
like, $3.69 for one 12 pack?
Yeah, it's just crazy. But the thing is, that's the price they can get. It's supply and demand, and therefore that's what it's worth until somebody says, you know what, I'm not drinking Coke anymore. And a lot of somebody say that, and then it forces the price down, or Coca-Cola goes out of business.
Yeah.
Those are the only two options that can really occur there.
Yeah.
So.
Well, you were saying about, a big player. You didn't mention all we have to do is have the government or the big bank, somebody open their mouth, and I think we've seen that the past 2 days.
Yeah, well, we saw that definitely this morning. What we had was 9 big mouths open their mouth this morning with the Brits, where they raised the rates to by 0.25%, and so because of that, it forced the market down. Because yesterday the Fed here in the States went and raised it by 0.5%. So,
but doesn't that seem? I mean, if our government raises it, shouldn't the price have gone down? I mean, wouldn't that be because that's the same effect as the Brits lowering it or not raising it as high?
Right, and that's what happened though too, because we're sitting down here, 23.70, 5.73, 71 now, and whereas yesterday it was up at 2,500, so it has gone down, and that was the effect of what happened. Now the thing is, nothing moves in a straight line, and just because it's one of those things where the fundamental traders, they can make money, but they make money by they see the news come out. True fundamental traders see the news come out, and they say, aha, the price is going to go down, but I don't know if it's going to go down today, tomorrow, even next week, but this is going to cause an effect, and so they make their bet on really long time frames. Well, we're going and doing day trading, where we're taking I'll go and admit my sin today. I've got 28 trades today. I can't trade fundamental news with 28 trades because I'm in and out so quickly. It doesn't make any sense. Now I can go and trade the reaction to it, short-term reaction to it. But if you saw the news that came out at first today at 7 o'clock Eastern time, what you saw was immediately the price spiked up. The price shouldn't have spiked up. Why did it spike up? Probably because there was pent-up orders sitting there because people expected, the Brits to go and raise it by more, and the time is what probably spiked it up. I'm guessing, but that's probably what happened. And then what happened was everybody saw, they didn't raise as high as we thought they were going to raise. Panic sets in, and all of a sudden now everybody's selling, and it crashes it down, and it crashed down like 40 bips or something crazy like that. Again, for me anyway, I stay clear of that just because, it's just, for me, it's too risky because, sometimes you're going to put your stop loss in there and sometimes it'll get overrun. And what I mean by overrun is that there's, just because you put a stop loss in doesn't mean that it gets honored. And the reason why it wouldn't get honored is because the broker, if it's true ECN, the broker says, I put the order out there, but there was nobody on the other side to take the trade. Now, people will go and say, well, there's all these billions of dollars or whatever. There had to be somebody out there who was willing to take the trade. Well, maybe, maybe not, but the thing is they're going to use that as the excuse for not honoring it.
Yeah.
So brokers will play broker games. So how do you protect yourself from that? Again, it's a risk management thing. Don't trade it. Generally speaking, I don't have that indicator anymore. I got to find it again. But I used to have an indicator that would go and literally paint a red box on my screen from like 5 minutes before a major news release and 5 minutes after the major release. So I just knew that, hey, this is a time that potentially we got some danger here. But what I do now is I just usually just put literally a yellow post-it up on the screen reminding me, hey, there's big news coming out at a certain time.
Yeah, definitely. Yeah, because some people hate trading news. Me, I like it because it's really more like a pinball game. But I've noticed lately, because of the way they've been moving price, I'll get slipped anywhere from like 2 points to 6 points, and it's just like, man, that can be a killer, especially when you're only looking to make net a pip or two.
Oh yeah, I mean that'll wipe you out. And again, that's what fundamental traders. Most fundamental traders, but professional fundamental traders are swing traders. So they're not sitting out there with a stop loss of 5, 10, 15 pips. They're sitting out there with stop losses of 100 pips. So usually speaking, they're fine and they're okay. But that's not the way the methods that you go and present to us all. That it really isn't conducive to that. So that doesn't work for us. But at the same time, what are you gonna do? I mean, but the thing that was interesting about this morning was, and I think I mentioned this to you, Kira, earlier, was that we had this huge swings back and forth like that, and the spread didn't go up that much. It doubled. It doubled its normal size, okay? Which during a major news event where you were getting huge swings like this, normally you see the spread going to ridiculous levels, like you said, of not 10 points, but 10 pips, 20 pips, and I did not see that this morning. So that was kind of interesting as well.
Yeah, I'm sitting here, I've got the M30 chart up with no indicators, and I'm looking at that big down bar, and it's screaming return bar. I'm just wondering if it will return now.
Yeah, I mean, eventually it will. The question is when.
Maybe, not necessarily eventually, but it may return, but how long is that going to take? We're looking at it.
5 years.
Yeah.
And that means if you were to go in right now without any other rationale or reason, you could get stuck for a long period of time, or get stopped out. But again,
or you might take profit halfway. I mean, it might get to the midpoint of that
exactly.
that candle.
Yep, I agree. And that sometimes, some people will go and say, well, that trade's an unrealistic trade, but the reality is you could take, depending on how you trade, you can still take profit on it. I mean, you look at that M30, the current M30, it got up to almost the midpoint, or if not to the midpoint. I can't really tell on my chart; it's too small, but it's real close to the midpoint. Short of that, you think about that from the open of this candle. If you would have gone in there, you could have picked up 7 pips on that, from the previous one. And if you go back and you look at, if you were, so my point being is that, you could have picked up a nice 7 pips. That's nothing to sneeze at, especially if you have any type of gunpowder, loaded in the gun with that.
Yeah, I'm looking at I've got the rat zone up right now, and we can see green rats prepare for sure. And you know what? The fastest 15 minutes in trading is up again. So, fellow traders, trading is risky. It's speculation. So, always have your stop loss in place. And just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.